Good morning. This is E for eminingwizard.com and marketwizard.com. Finding traders to use risk capital you can afford to lose. This is one of the more treacherous markets that we've seen in a long time, and you really need to make sure this is an appropriate market for you to be trading. If not, at least get an education and see that. If you've been in the market only about 5 or 6 years, you probably haven't witnessed these types of moves, and you're going to be surprised at just how ferocious a true corrective move can be, as evidenced by the last couple of days. Don't forget, one of the hallmarks of these type of markets is ferocious bounces that seem to come out of nowhere. And we're going to remind traders that if you have an inkling to try a contra, you really should have some profits generated from the trend trade. And it will be a lucky guess at some point where we stall and where we take off from, and then subsequently sometimes we can get these ferocious bounces. And what you don't want to do is be stubborn. You take your stop out, and then you'll try one more time on the short side until proven wrong. So we're looking at a 10-minute globex chart that I had posted earlier. I said I think this is the chart in play. So far there's nothing that has changed my mind about that. And we can see because we got under the slope line and we've maintained the integrity of that blue line. Once we get above that, we're still not out of the woods, but it will start to soften the belief that it's just a one-way down type of day. We've already suggested traders make sure you are paid coming into that 56 from the long side. That was a target that we had, and now we've got a completion target at the 48 to 52. So time and price, we're suggesting realistically you should get paid, and if your stops are not hit and you want to just trail, that's up to you. But your day is already made if you've already played short side and taken the trades that we've been suggesting pre-market. Great calls yesterday in terms of understanding where we thought we were going for that 60 gap, and I said let's make sure we remember 75, the year open 75 and a quarter. That test comes first, so we go step by step, and we'll look at a few ideas today. Don't forget, there's an educational room where we're trying to help you learn how to fish, and we're going to get these types of trades, so it's worth taking the time to learn them. It's never about any one day unless you make it so, and if you do, you're going to get carried out in a body bag if you trade large size against the move and then keep adding in. You take your stop loss and then look to try again. Probably should not be using anything more than, say, a 3-point stop. If you have to do that, you're probably wrong about the direction. 48 to 52 support for profit taking. All we know is time and price. It makes sense to make sure you are paid if you have traded overnight. So before we worry about these potential targets lower, we need to get by these smaller rotations. And we can see there's not a lot of support built up here, but just by the law of measure, we want to make sure that we don't get caught flat-footed right here prior to the open, because somebody's had a great trade overnight, and you want to respect that. You want to say, okay, somebody wants to make sure they get paid before the big boys come in. And that's the awkward part about trading near the end of pre-market. You want to make sure that, you know, you've worked at Walmart overnight. You want to get paid. And that sometimes causes these bounces, and that's what we call sequence trading. So this is a very important chart, and we know we were back here yesterday, right? That's a substantial move from where we said was the year middle. And here's our angels and demons look. So basis this chart already, we know that the overhead resistance is going to be back here in that 73 to 75 area, just simply by looking at this one chart. We know that. Anybody that is playing this open A reminder, we can get a jackrabbit too today. Once we get oversold conditions, then we can get sharp bounces. But there needs to be a reason for it. And usually that reason will come from a location that's being defended, but also some type of a news event or whatever, some nonsense that the boys cook up. So at the open, the longs are obviously have been trapped. They still have to pay up, and that typically will cause us a little more bleeding before we're done. Question is how much more. And this low got taken out, so just above it back here, let's call that 75. That's our current resistance right now. That's aggressive resistance. And at this point, after this type of a range, very challenging risk and reward right here at the open. So if you don't want to trade right now, I get that. You can stay sidelines. Trend trades are south side. You take your stop out and then try one more time. And yesterday, we remember had a little bit of good fortune at the open, and then this thing. And I said at the time, I didn't think we would get this type of a move yesterday, but we started to read the tea leaves pretty well, despite our opinion that, well, we're going into a holiday weekend. 48 to 52 has been suggested as make sure you are paid. And we can see by this law of proportion that the 62s are the first target that longs have to get above. And then obviously the 72s. And today has the makings of being an ugly day, but the problem with this is it's in low volume overnight move. And at some point we will get a sharp bounce today, I would think. And we'll hit one more bounce today, at least. If you don't like this open, stay sidelines.